All right, what's going on, everybody? Let me make sure you guys can all hear me first. Yesterday, I was having mic difficulties here. Shoot me a message in the side, please, and let me know that you guys can hear me, and then we'll get into it. Some crazy overnight action here. That's for sure. We have Fed speakers coming up, but we don't have any high impact data drivers. So just making sure. All right, cool. Everybody's good. All right, let's do it. Let's first we'll get into big board, then we'll get into individual names. So if you're looking at any individual names, please shoot them in the sidebar, and I'll throw them up here. Let's see. Also, like the stream, share it, drop your comments. Appreciate them all. But first and foremost, let's go with a little market overview here. All right, so let me just get rid of this. Good, everybody should be able to see my screen now. Good. All right, so first off, you'll notice that every single time we've seen some sign of life, it's just been absolutely eviscerated. And you will also notice that we have an absolutely enormous range dating all the way back towards Tuesday afternoon when we got that most recent shift in structure by taking out this low, right? Even these little bounces, they did not get you up to 50% of the range, and ultimately taking that next leg down. Now, we did take yesterday's low already pre-market with whatever excuse, cybersecurity or whatever it is, but I'm looking from a little bit farther out, and I'm looking, and this low right here is just, it's irking me. See this low here at 19,726. We talked about that first level yesterday, which turned out to be, what was it? Like 822 or something like that. And then we were trading live, and that was the level that ended up getting hit. This isn't like the most comfortable sweep of the low. I would prefer this 726. Now, is that going to happen? At some point, I do believe that's going to happen. What's really sketchy is that we're about to mitigate this bearish or this bullish fair value gap here, which is not good. If next week were to create some sort of bearish imbalance, then we could be in for some bit of a rude awakening. But still far away. So I would really like to see the reaction to 726. If we come on over here to ES got into that weekly fair value gap here, and so far holding up on it. That's another situation where, if you're bullish, you really do not want to see bullish levels get mitigated. And so far it's holding up. But like I said before, that 726 low, really sketchy. This would leave behind relative equal lows also, so not totally thrilled by that. So really what I'm looking towards today is ultimately this imbalance right here. This is actually pretty important, and I think we're going to get an answer to it relatively close following open right here. So this is a bearish fair value gap, which is in discount of a bearish range, shorter time dated range. Now, like I said before, the overarching higher time frame range is massive. This coming from the 1 hour time frame. So you'll notice that within each one of these price runs, whether it's a weekly, daily, hourly, you're going to have their own independent price runs. And even this little price run here, if you were to go to a smaller time frame, you're going to see this run clear as day. Okay, we took out that low with that price run. On the hourly, we just have to zoom out more, knowing that we never got up into that 50% of the range. So, honestly, what would have been ideal would be those pre-market theatrics to take out that 726 and then ultimately give us a nice little TGI Friday or 20% weekly retracement to close out the week. But right now, we still have yet to take out that low, and we're kind of just chilling inside this imbalance here. Now, if we were to take this imbalance here, take out that high, from that point, then there's potential for that 50% retracement. And notice how for each time that we've essentially stretched this range more and more and more to the downside, now we've got liquidity built up right around 50% of the range, which is also not all that ideal. So that's really where I'm currently at. Over the last couple of weeks, I've had a very, very specific and pinpoint accuracy with this. And ultimately today, unfortunately, it's just more of an overarching idea that 726 is really sketchy. I'm going to wait and see what happens here with this imbalance, and then kind of operate as I see fit following this reaction to that level. We still got some time pre-market here. So that's the overarching idea on NASDAQ market as a whole, waiting for things to shake out just a little bit, because we really don't have any high impact news other than I believe there's a couple Fed speakers coming on after 9:30. So and like always, I really don't care what they say, right? Everybody is just searching and searching and searching for the reason for this retracement here. And this is something that it was brought up Monday here, so we talked about it. The speed in which it happened, I will give you that. That's very difficult. It's hard to forecast a $600 day, right? If we have the old overall direction, or we feel as if we had the overall direction, and obviously we were right, but 600 points in a day, that's tough to quote unquote call, right? But with time, we'll see what happens. But yeah, like I said before, 726 is really, really sketchy. Those equal lows right there. This imbalance, I think, will give us some insight as to where we proceed to towards today. And 50% of the range is up here, 20,184. That's above relative equal highs here that we left behind from yesterday. And you got a bunch of bearish levels now. So even this, throughout, this is going to be a high resistance run for liquidity, if any. So my optimism for bulls is a little bit lower, but 726, and then from that point, we'll see reaction. And that to me is important. So let's slide on over. Like I said before, if you guys have any names, individual names, feel free to drop them over here in the sidebar. We will get on them. OPEX rally today. Maybe. Like I said, that's 726. That's a higher time frame sell side liquidity that could generate some volatility to all upside. But from where we sit currently, this is a little ugly, really a little ugly. Morning. All right, so let's go. The first that we'll look at, we can look at Amazon here. Let's go for a little quick draw. All right, here's Amazon. So this is the weekly breakout that everybody wanted to play, above previous all-time highs and buy-side liquidity. And essentially, we are mitigating that bullish level that we had created, right? So here is your bearish imbalance, or I'm sorry, your previous bullish imbalance that at this point will be viewed as a inverse or balanced price range from this current moment, right? Where we sit in terms of our low, also not really like that great of a spot, and we have relative equal lows down at 16575, 50% of the range at 15977. Now this it a little early potentially, but if I'm looking at this from a bearish perspective, ultimately this week close and next week, as long as next week doesn't come and fill up at, where are we here, 192.82, that would, as long as it does not go up to that level, you would create a weekly bearish fair value gap. And from that point, I would be anticipating a move back towards discount of the range. You're going to hear me say that on a lot of these mega cap names if that imbalance is to form. And you know, you might say, like, where am I pulling that from? Literally just go back in time. That's all. Just go back in time, and for every time that we've created some sort of weekly imbalance to the downside, that has been the market tipping its hat to you and letting you know that price is likely to retrace the discount here. And you know, like I said, there's just millions of examples of it throughout the entirety of this run. So that would just be something worth noting there. And you know, the fact again that we're mitigating bullish levels is no good. So that's the weekly. Let's go on to the daily. Okay, so swept these equal lows right here, deep down into discount. So this is kind of important for the Amazon bulls here. So let's just draw out our daily range, low to your high. Notice how we got to 50%. Here is your low to your high, and currently on a smaller time frame, daily, we have shifted structure bearish. So now even if we were to retrace, here is your bearish range at the moment, and 50% of that would be at 190.19. So that would be Amazon right now. Yeah, I mean, look, I think everybody on the planet is looking for bounce plays at the moment, and to be fair, I am as well. I'm just waiting for hourly here, so let me pull up this hourly. Whoops. I'm waiting for hourly imbalances to give me a little bit of or to help me feel a little better about the actual place of us putting our foot in the ground rather than just trying to jump it and call bottom, because that's dangerous, right? You know, for each one of these bottom calls, you probably would have gotten smoked this week. So preferably we form some sort of bullish fair value gap, and from that point you can get your retracement from there. But at the moment, nothing really suggesting that yet. So that would be Amazon. Okay, let's go to SEDG. Okay, let's see. SEDG. Okay, so from the weekly perspective, also really beat down. Let's zoom out and let's just see where we currently sit. Okay, we swept up these lows right here. And this low, these are relative equal lows. Okay, and where did we bounce from? Let me just zoom in here. I just want to identify where this is coming from. Okay, let's zoom. Interesting. It's really random though, right? That's a level from 2017, guys. You're really trying to tell me this is random? Come on now. Anyways, where we currently sit, we are rejecting this bearish imbalance right here. You have one bullish volume imbalance here. So, and again, this is just like every other situation that I'm currently looking at on smaller time frames. This needs to form some sort of bullish fair value gap for me to want anything to do with this, really. Until then, this is not much for me, right? Because then, in a sense, without that little bullish imbalance to give you a little bit of clarity, then I think you're kind of just you're just guessing to try and call bottom, right? You don't need to get smart. Oftentimes, you'll get the opportunity, and you will get a retracement into that opportunity. So, yeah, at the moment, nothing. All right, so let's go back over. Let's see. Okay, Google. Sure, Google. Okay, Google, very similarly to Amazon, we are currently melting some of these bullish weekly levels here. These are volume imbalances, okay? Notice how you really don't have any imbalances currently, that we're currently below the two bullish weekly levels that we have. 174.97 is the next, but also honestly, I think we're going to form the bearish imbalance and retrace down into discount of this bullish weekly range here. This is not a pretty candle by any means. You would need some serious fireworks this week and to start next week to prevent that bearish fair value gap from forming. And while that's a possibility, if we were to go down to smaller time frames, there's still nothing at the moment to suggest that, which that could change. But here's your daily. Oh, whoops. Daily bullish fair value gap. We just got into another mitigated bearish level there. Let's come on over to the hourly and just see. And no hourly imbalance. So despite this grind higher, there's been no imbalance formed other than this volume imbalance, which I don't really deem as, look, I guess technically it worked in this situation, but I need the fair value gap to give me the structure for that idea. Now, are these equal lows? Because if they are, that's really gross. Let's see. Low of this candle is 176.47. Low of this candle is 176.46. Okay, good. So you did sweep liquidity down here. But again, no bullish imbalance here. So that makes it very difficult for me to structure the trade idea as a result of that. So again, we're just waiting for some sort of imbalance. Until then, I got nothing. All right, Meta, sure. Another one. Ready? Here's Meta. Yep. So ideally, if you're bullish on Meta, just like all the other names, a weekly close back inside this 480 would be encouraging, but still not the prettiest. So Meta, obviously a massive, massive range from the lows of October 22 to the high that we made back last week. Again, you don't want to see bullish levels get mitigated. Currently, we are below it with the possibility of us being able to reclaim that throughout the week. Let's just see the smaller time frame, and if anything's giving us any more, these equal lows are a little sketchy right there. Right, boom, boom. Okay, daily level, daily we are in discount, but come on over here. Let's see if Meta has shown any sign of life. And Meta actually did form a bullish fair value gap. So there is some structure here that can be used. Now, 50% of that range is really far away. This is another huge, huge range. But we are currently working inside this bearish fair value gap, which I don't believe will be a rejector, if you will. I think this is more of a roadblock. So to slow price down, which so far it kind of has. But yeah, again, I want the imbalance to form. That way I have structure to my trade. I have my entry. I have where I should place my stop loss, and I have my ultimate target moving forward. So that would be Meta, and Meta's up pre-market right now. Let's see. We got a couple minutes here. Crowd. Considering the pullback is having today, may look juicy in the future. Sure, let's look at CrowdStrike. I think CrowdStrike is way in premium, and I'm right. Yes. Yeah. CrowdStrike is way in premium. So if the bulls can close us above 349, that leaves this open to interpretation moving forward. But yeah, mitigating this level would be really bad. And you don't have any levels down here really that have been untouched. And like I said, next week on a lot of these names, next week has the capability of forming a bearish fair value gap. And that, again, go back in time and just look for every time we formed a bearish fair value gap, what happens, right? That tends to be the hint that we're going to get a retracement into discount of whatever that range is. So whatever time frame that range is, I should say. So yeah, CrowdStrike, I mean, look, to be honest with you, this could be volatile today, but I have less than zero interest in trading this. There is an hourly fair value gap there, but no, not for me. Definitely not for me. All right, let's see. I think there was one more. CrowdStrike. Oh, shoot. CrowdStrike's. I'm sorry. CrowdStrike. Where's the daily? Hold on. The daily's got the 24 hours for me. Hold on. Sorry. It's just the market didn't open yet. Ooh, daily market structure shift. You see this? Okay. So from your high down to your low. Okay, so current price 297. Let's see where that lines up with on actually we need to see the low 270 was that low. So we swept liquidity here, and so far we're getting a bounce. I think 50% is going to happen at some point. That's at 257. This is extremely volatile with the huge range. So, but isn't that amazing, right? This is a massive bullish range with discount down here, and yeah, I mean, I mean, come on. 257. That would bring you into that discount bullish imbalance with a massive candle down, but yeah, that would be pretty crazy. But yeah, so that would be CrowdStrike. Sorry about that. Yeah, see the weekly, it didn't update yet. All right, Kyle, Uber. Okay. Uber not close to discount. Here's the one difference. Uber actually had a bearish fair value gap from a couple weeks ago. There it is. Does have a bullish fair value gap here. To me, this is bearish. I think we can go see discount here on this name also. 55. So I think this is going to continue down, and this would be the level to watch for mitigation. If you form that imbalance down through, that's really a telltale sign there. That's Uber. GTLB. Okay. All right. So really deep into discount here on GitLab. We're working on this bearish fair value gap. Okay. So honestly, not really, I'm not like totally interested in long here. I think above this bearish fair value gap, you see 60-62 for a potential turtle suit move. But I just want to see this because I think this is going to... Yeah, these lows are a little shady here at $40, 40 and 42, to be honest. Low, high, lower, low, break up and through. So you do have your breaker here. I just don't like the way that we put in this low, bouncing off only an order block, nothing else. And here, a sloppy bounce. Yeah, nah, this one's definitely not for me. Let's get lab. Let's come on over here and Hubs, last one. Hubs. Big bearish imbalance here on the weekly time frame. Let's see. Overarching bullish range. Not really much to work with. This is the spot, I think. This is the spot you'd want to catch and close back over here. There she blows. But this week is going to create a weekly bearish imbalance. So despite this being in a much higher time frame bullish structure here, from your 2020 lows to your highs, here's your discount retracement. Here's your bullish imbalance. Oh, shoot. And then ultimately awaiting run for highs. But this is an important spot to hold. If not, it could be a liquidity sweep prior to getting a move on there. Let's just see other time frame perspectives. Yeah, that's ugly. Look at that monthly inverse, and clearly rejecting the monthly bearish fair value gap right there. So always a reason. Always a reason, always an answer to that. So anyways,
what was the reason? What was the reason? I just explained the reason. What was the reason?
All right, so I'm wrapping up here. We're gonna do live trading for a little bit today, probably not all that long, but if you want to come on over and join, look at the link in my bio. I will catch everybody next time. We'll be back Monday for this pre-market prep show, and good luck today. Stay safe, and we'll see how it goes.